Welcome to TS Lombard. Today we're talking about our monthly strategy for emerging markets. The theme, President Trump, and concern, the potential rise in conflicts between the US and China that lead us to recommend to investors to take some risk off the table. The two main themes that we have used to build our investment strategy, number one, stronger global growth. This is clearly a positive for emerging market equities. But the second theme is that the new administration has given very convincing signs that they're seeking confrontation with China. And what concerns us is President Trump has sought to put all issues onto the table for negotiation, not just trade, but also other issues such as Taiwan, the One China policy, Tibet, South China Sea, which are really geopolitical issues, onto the table along with issues such as trade and the currency. And we think this will inevitably lead to conflict in US-China relations and potentially retaliation from China. We have last week seen the new economic team. We like the new economic team. Gary Cohn, who is likely to be the heavyweight in the White House, is the director of the National Economic Council. And we think that's very positive. And he's going to move strongly toward the deregulation, in particular on Dodd-Frank financial regulation, which, as he commented, has not achieved what it was intended to achieve. So we view that as positive. The second concern, however, is in US-China relations. And the reason is that Trump's approach to negotiations, to put everything onto the table to negotiations, in our view, inevitably will lead to conflict at some point in time. So we can't say for sure when this is likely to happen. We think tensions will probably grow gradually over the next 12 to 18 months. So it may not come immediately, but our sense is it's moving in the wrong direction. And we think that this implies that there could be significant geopolitical risks. And with global markets, by and large, fully valued at the current time, we think that the proper response for investors is to take some risk off the table. To de-risk portfolios in emerging markets, that means to concentrate on those countries likely to be relatively immune to a spillover from China. So that means focus on Russia, clearly. India, we think Southeast Asia will also be relatively isolated from China spillover. And countries most likely to be hit, obviously, in the short run, Mexico, China, Korea, and Taiwan. So the bottom line is look at portfolios, look where you can de-risk, take some of that risk off the table because we're heading in the wrong direction in terms of overall geopolitical risk. Thank you.